Welcome to today's market report.
European stock markets pushed to all-time highs on Monday, helped by optimism of a global economic recovery, although Credit Suisse slumped after warning of a highly significant hit to results due to its exposure to a single unnamed client. DAX in Germany traded 0.3% higher, CAC 40 in France rose 0.2%, while the benchmark Euro Stoxx 50 gained 0.2%, climbing to an all-time high. FTSE 100 underperformed, falling 0.2%. Investors are growing confident about a strong global economic rebound from the COVID-19 pandemic, led by the United States, particularly as President Joe Biden prepares to unveil a new infrastructure plan, potentially totaling as much as $3 trillion. European stocks have lagged their US counterparts in the past 6 months as new lockdowns in the continent and a relatively slow vaccination program dented the region's economic outlook. Despite Monday's gains, concerns are growing at Europe's biggest economies will have to tighten their restrictions still more, further delaying the region's economic recovery, after France, for example, posted its highest number for COVID patients in intensive care units this year on Sunday. French President Emmanuel Macron has defended his decision to introduce partial measures targeting high infection zones like Paris instead of a third full lockdown, but he did acknowledge that further restrictions would probably be needed. Meanwhile, German Chancellor Angela Merkel threatened to invoke federal emergency powers to stop the spread of the disease after the 7-day average case number hit its highest since January. In Poland, the number of new cases hit an all-time record at the weekend, while case numbers continue to rise in Belgium, the Netherlands and Austria. By contrast, Italy's infection curve has flattened, while Czechia is now in sharp decline after a spike in January and February. In corporate news, Credit Suisse stock fell over 10% after the Swiss banking giant warned of highly significant damage to its first quarter results, as it has taken a knock from a large US hedge fund that defaulted on margin calls last week. Other bank stocks with significant prime brokerage operations were affected, with Deutsche Bank falling 5.6% and UBS falling 3.9%. Barclays stock fell 1.7%. Earlier Monday, Japan's biggest investment bank, Nomura, flagged a possible $2 billion loss at a US subsidiary, which the bank said stemmed from transactions with a US client. Hugo Boss stock slipped 0.5% after the German fashion house became embroiled in the spat between China and the West over accusations of forced labor in Xinjiang. Oil prices retreated on Monday as the container ship stuck in the Suez Canal was partially refloated, raising the possibility that it may be freed in the near future, unblocking the key waterway. US crude futures traded 1.5% lower at $60.97 per barrel. Brent contract fell 1% to $63.8 per barrel. However, despite these losses, both benchmarks are still set to post a fourth consecutive quarterly gain this week. Gold futures fell 0.3% to $1,727.25 per ounce. On the FX front, a sudden pickup in demand for the British pound pushed the GBP-USD pair to 4-day tops around the 138.35 region during the early European session, albeit quickly retreated few pips thereafter. Following an early slide to the 137.55 region, the pair caught some aggressive bids and turned positive for the third consecutive session on Monday. The strong intraday momentum assisted the GBP-USD pair to build on last week's bounce from multi-week lows. The uptick, however, lacked any obvious fundamental catalyst and could be solely attributed to some cross-driven strength. The GBP EUR cross dived to the highest level since February 2020, and GBP yen cross rallied over 100 pips from intraday swing lows. Apart from this, the latest leg of a sharp spike over the past hour or so was led by some technical selling on a sustained move beyond 138 round figure mark. That said, the underlying bullish sentiment around the US dollar capped the upside for the GBP-USD pair. This, along with a weaker trading sentiment around the US equity futures, benefited the safe haven US dollar and should keep a lid on any further gains for the GBP-USD. Euro dollar's leg lower appears to have met decent contention in the 117.60 area, coincident with a feeble level of the November to January rally. The dollar index traded at 92.865, just below a 4-month high.
This is today's market news. Thanks for listening. We'll see you next time.